One of the most profitable strategies you can add to your portfolio is a mean reversion strategy trading the stock indexes. This works almost globally, but it works really well on the US indexes. And there are many indicators that we can use to build a mean reversion strategy. I did build the KCC percent indicator to get a different profile for a mean reversion strategy than, say, the RSI. KCC percent uses the closes to measure the percent difference between them and then rank those values to get an oscillator between 0 and 100. And then from that, you can get the signal to enter and exit the market. And this is how the indicator looks on the chart. You see it's an oscillator, and here I have the levels: 75 for overbought and 25 for oversold, just like the RSI, but we will get a different profile if we trade this signal. Now you might say, why bother with doing the same thing like the RSI or the stochastic RSI? The reason is to get a different profile of your equity curve, because, for example, your RSI might be losing in 2021 and KCC percent will be winning. That doesn't say that this indicator is better than that indicator. It's just they get a different equity curve, and that will help you in building a portfolio. And now I'm happy to say that KCC percent indicator is available on multiple platforms for you to explore, build strategies with, and so on and so forth. It is available on Tradestation using easy language, on Multicharts using Power Language, on SQX using Java, and on TradingView using PineScript, and on MT4 and MT5 using MQL. Instead of sending you on different pages to download the indicator, I put all of them together in the community. So if you go to Start Oasis community, which is free, by the way, for everybody to join, it has huge content and you can ask questions, share ideas. It has all the previous recorded stream with a database. This is the database for all questions that are answered on video, and you can search for anything. So for example, if we want to search for Monte Carlo, you'll get the episode, the question number, the timestamp, and what the question is. So do yourself a favor and join this great community. Now, the KCC indicator will be in the free shares, where I share a lot of code for strategies and indicators. And you can see I put everything together here. So this is where you can get StrategyQuant X, and MT4, MT5, and of course it will include Tradestation and Multicharts code. And also here, this is the PineScript for TradingView. It includes the indicator and a strategy. Here we are in TradingView. The indicator is already there. So in the meantime, you can download the indicator and upload it to your scripts. So once you upload the indicator to your script, it will be available under my script. And you can see here, this is my indicator. And it's the same thing. It has a lookback period, a smoothing period, and an overbought level and oversold level. Also, if you downloaded this PineScript package, you'll get a strategy. And once you upload it to your script, this is the strategy. And this strategy is not coded by me. So if we look at the code, it was developed by Michael Patrick. He's a viewer of the channel, and basically used the indicator with a strategy to go long and short all the time in the market. And this is the strategy tested on the ES. If we close this, you can see this is the indicator and these are the signals. And this strategy is always in the market, long and short. So I'm really happy that the indicator now available on multiple platforms, that you can use it to test on other strategies. Of course, you can use the indicator also as a filter for other signals. For example, if you build, let's say, go long on engulfing candle pattern, you can use the KCC percent to filter. So you can only go long if it's below 25, and you can use it also only for exit. So for example, exit if it's above 75, and so on and so forth. Here is the indicator now used on a portfolio of futures market. And I'm still using exactly the same indicator. So look back of 7, smoothing 3, buying below 25, exiting above 75. In this case, I have the 200-day moving average as a filter to go long or short. And if we back test this strategy since 2007, there's no commission in slippage. This is just to show you the robustness of this indicator. And this is the chart we get. And if we go to the breakdown, we can see that most futures market making money. Of course, the indexes are the most will benefit the most of this indicator. But we also notice that gold is behaving really well with this indicator, soybeans and Bitcoin. Now, Bitcoin, there are only 17 trades, so I wouldn't put too much thought behind it. But then the nice thing is when we look at this portfolio, you can see the correlation. Many of them, of course, are red, like the DX is red with everybody, and soybean meal and wheat, lean hog, they are red almost with a lot. So the correlation is definitely good considering we are using exactly the same settings for all markets. Now, this is not new information. I share this a lot on this channel that mean reversion strategies works really well with US indexes, but also works really well with a lot more markets than you think of. And the future portfolio that I just showed you proves that. Now, it also works really well on ETFs. So here are 15 ETFs. They are sectors and indexes, and this is leveraged ETF. So the leverage is built in. And if we test this portfolio, again, we can see that the correlations are not as expected. So obviously we expect the triple Q, this is the NASDAQ, is highly correlated with SPY, and the leveraged NASDAQ ETF is also highly correlated with SPY. But we can see that not all of them are. So for example, SCZ, this is the small cap world index, it's 35, that's considered not a lot. XLU, of course, these are sectors, even though they are part of the SPY, they are not highly correlated with. And then EM, this is emerging market, and SLV, these are really low correlation. Of course, IVV, it's like the SPY, except, you know, the weighting are different. So that's why the huge correlation here. But the performance is actually better than the futures. And of course, I picked the best ETFs that work with this indicator. And we can see that we barely hit 14% drawdown. But since 2004, this is performing beautifully. So I highly recommend that you download the indicator, use it in your own systems, because the indicator produces signals different than the RSI, MACD, stochastic, and so on and so forth. And that's the whole point. The whole point is to get a different equity curve, even though this is a mean reverting indicator. And of course, like I mentioned, you can use it also as a filter. To find more about this indicator, watch this video and I will see you there.